Καλησπέρα σας, κυρίες και κύριοι. Ευχαριστούμε που είστε μαζί μας εδώ σήμερα.
Hello, ladies and gentlemen. Thank you for being with us here today. In order to present the book which was edited by Ms. Katerina Bregianni, Shaping and Reshaping the Global Monetary Order. As a parenthesis, we might say during the interwar period. This is a book written in English. This is not a disadvantage in terms of its value. In fact, it adds to its value because it's addressed to a wide audience. Because the topic in itself, as you heard, refers on first blush to a very specialized approach. Perhaps this is the case, having read the book. So the perspective of a group of Greek and foreign researchers who approach this subject is quite important. The background and perspective of each of these persons is very important, so it has a wide, worldwide prestige thanks to the use of English language, which was carried out by the editors. So this is one of the bonuses, one of the advantages, the fact that it is in English. Let us hope that if there is interest, we will see a translation into the Greek language. Mrs. Bregianni is the Director of Research of Modern Greek History at the Academy of Athens. I held an online broadcast on this subject, the very subject, with Ms. Bregianni and Mr. Tsulfidis, who's seated beside her. It was coordinated by Mr. Varsakelis, also a professor at the University of Thessaloniki at the School of Economics. And what I concluded was, and I think it will be proven here today, is that they will be able to tell us all these technocratic things that may be contained in the book. It will be presented in an easified, comprehensible way. And I think they're very beneficial, very useful, and they greatly helped. And you can truly tell this from the views we had of the video that we broadcast. So it seems that there's a response. It's comprehensible and the topic's very interesting. I'd like to give the floor and not abuse your time. When we're discussing the interwar period, we're talking about a period after the Asian Minor disaster in Greece. Greece was in ruins. Greece had a tremendous influx of refugees from the Asian Minor Sea and the Black Sea. Earlier, it had received refugees from Thrace. And Greece was coup after coup in terms of politics. Greece, in short, was in chaos, but nevertheless, it managed to stand up, to become organized. It weathered the recession of 29 up to 32. Venizelos came to power. Maybe this was for the best at the time, the fact that Lefteris Venizelos was in charge. And what I understood while watching the broadcast was how at the international level, economic institutions took shape, and their extension persists even to this day. We should also consider that after the interwar period, after 1918, there was an intense presence of Wilson, the U.S. president, who had also been inspired of the 14 points of his tenets about self-determination of peoples, as we all know, but these were diluted over time. So this interesting was a dynamic period that shaped economic institutions and on which the book focuses, which, as I said, they extend even to this day. So who will take the floor first, Mrs. Bregianni? I'll speak first to put this book into a context. I would like to follow the structure of our colleague, as you said, from the other day's broadcast, which I think was quite elucidating for the audience. So this book is part of a research program, which I direct at the Academy of Athens. It's technocratic, as you said, and that's exactly what it concerns. Transnational monetary policies and exchanges in successive states in during the interwar period, not just in Greece, but from a broader perspective, which includes the case of Greece. And it also includes how Greek politics occurred during this period under the influence of the international institutions. I would say I'm somewhat pleased that you brought up and highlighted the fact that international institutions, whose evolution we experienced and we perceive even to this day, are precisely rooted during the interwar period. And this is a result not just of the effort to restructure the European and the global economy after the First World War. As everyone knows, after the First World War, we had great inflationary crises in Europe, including Greece, of course, great devaluations of currency, and in this state of monetary uncertainty and instability, the founding of the League of Nations tried to smooth things over by the creation of the Monetary Committee and by implementing specific monetary rules. All of these are issues that we study as part of our program. Therefore, the creation of this committee was a precursor, is a precursor of the International Monetary Fund and everything that happened after the Second World War in the global politics started there. At this point, I would like to say we shouldn't idealize things. We're talking about broad institutions, but in the context of the League of Nations, the leading power was England, and the monetary rules imposed by England, and therefore economic terms, the establishment of what is the precise subject of this book, a global monetary order. This was a directive, if you'd like, or a protocol, which stemmed from England, or rather, to be more correct, British. And what is the reason behind this? How can we approach this? In more conceptual terms, after the First World War, an effort took place to return to economic liberalism, which was the case in the late 19th century. Normalcy after the First World War is an expression of the effort of Great Britain to return to free circulation of funds and goods, as was the case during the late 19th century. And this framework was completely overturned during the early 20th century and resulted, of course, in the First World War. The idealistic core of this policy was the effort to establish global peace, peace around the world, through, on one hand, a free economy, and on the other hand, if we can use this phrase, national purity of peoples, which also includes the exchange of populations, which directly concerns us, particularly in Macedonia. So they try to cope with the conditions that were created by the First World War, and secondly, to deter a second war. And they try this through the establishing a liberalized economy, a free economy, and secondly, through nation states with a homogenic state, with homogenic populations. Of course, as we all know, the Second World War came about, and precisely due to the Second World War, this never occurred. Nevertheless, the overall endeavor resulted in the creation of technical, economic, international institutions, which, in a sense, dictate or set the framework for the national economic policies of the member states. But they also have an impact on the regions at the local level. Therefore, it's a research of scale, going from international to national, from national to local. It's a top-down approach. So, as an example, to be more specific, and to summarize what was said, we have the rural establishment that took place in Macedonia, the refugees who settled there, because this is directly related to the policy of the League of Nations, because the rural settlement, as you all know, the mandatory exchange of populations between Greece and Turkey, was ordered by the League of Nations as a result of the Treaty of Lausanne, and its handling as far as the rural space is concerned, not urban space. So, in terms of the settlement of refugees, this took place by the Refugee Settlement Committee, which was an international committee, and it included representatives of the League of Nations as well as representatives of the Greek government. What is important to note here, and which is not often brought up, and the colleague can confirm this, I think. We don't really discuss this in Greek economic history. These were not international funds, not national funds. They came from loans extended by the League of Nations, specifically in order to provide this international aid in scare quotes because these were loans. But the League of Nations set certain rules, which included the establishment of the Bank of Greece, which had discretionary powers to issue currency and set the national economic policies of Greece, and of course to ensure stability for the currency. So, through historical phenomena, or rather, we see how historical phenomena, how historical occurrences lead to the establishment of national policy through such international pathways as I mentioned, and the ways funding is provided. So, what is quite important in order to examine precisely how a global monetary and economic order takes shape is to examine how international institutions mix with each other, so to speak, based around historical occurrences. And that's precisely why I brought up the example of refugee resettlement in the rural areas of Macedonia. Now, what is occurring, and I'm sure the colleague, Mr. Tsulfidis, will discuss, is that the economic crisis of the interwar period completely shattered this scheme, both in terms of Greece and previously the entire world. Greece and Eastern Europe suffered particularly due to agricultural production, because the first symptom of crisis was a decrease in the price of agricultural goods. However, at this point, we should note, and this might have some bearing on current reality and current economic developments. What I observe from primary sources, and not statistics, meaning banks and bank data and data from the League of Nations, there seemed to have been a decrease in production and decrease in currency reserves of central banks far before the crisis. Therefore, I think the US are correct, our US colleagues are correct when they say that the Great Crash was the outburst and the manifestation, not the cause. I think this is certain. I see it in the archival material. This is the broad information I wanted to convey. And I would like to say one of our research results of the program and this discourse was this collective volume. I focused my efforts in terms of editing on condensing and combining different views because I believe that polyphony and diversity of opinion is always a benefit for scientific research, and it's impossible to be unilateral in research. I would also like to add that the overall framework, and therefore the book itself, is the result of collective work. It's clear from the recent decades that Research cannot have results. No one can have results in research working alone. You need teamwork in research and the functioning of not just one, but numerous research teams. And I think this led to positive results because this book is the result of the contributions of both foreign colleagues and national colleagues. One of the foreign colleagues is Mr. Jürgen Nautz, who will also speak today about the example of Germany during the interwar period. But to continue more seamlessly with my introduction, maybe we should first discuss the Greek economic crisis, which is the chapter covered by Mr. Tsulfidis in this collective volume. And subsequently, we will give the floor to Mr. Nautz to discuss Germany, which is a great example in terms of the interwar period due to the well known, very important political impact. I agree with the final remark made by Ms. Bregianni, which is that research cannot take place irrespective of what's going on around you. You need teamwork, you need interaction, you need criticism. And I believe this is an issue that crops up in the book and cropped up during our numerous meetings at various conferences are organized by Mrs. Bregianni, into which I had the pleasure of participating in two of them. In fact, in the second one is where I presented the article which forms part of this book. And I'm quite honored because I consider this book a very successful effort because it has mobilized people both in Greece and abroad. And I consider this a very positive outcome. And it's a great honor for me as well, says Mrs. Bregianni. As concerns my presence here, as well as in the book, what I would like to say is that I began working on this article precisely because I believe in the long term approach in economic occurrences. And this is an approach that was greatly encouraged by Mrs. Bregianni. She encouraged me greatly in following this perspective and encouraged me in writing this article, which may concern Greece as a topic, but also takes into account the international environment. Contrary to what many believe, whether they're historians or economists, I believe that the 1920s were not as good as most people describe. And if one wants to truly understand the 1920s, perhaps what the economists have to say is not the best way to understand it. Maybe they're not so believable when we show economic data concerning the period. I would say that one will get a very good idea just by reading the work of Fitzgerald or watching The Great Gatsby on as a film, because I believe every version of The Great Gatsby is fantastic and truly convey the overall atmosphere of the 1920s. I believe that this atmosphere was one of recession. It was a recessive atmosphere. We had the recessions of 1921, 1926, certainly the ones of 1929 to 32, which was the worst of the era. But what is interesting to note is that this is a long term period. It began in 1896 and ended when the First World War ended, which was a period of economic boom. And after World War One ended, so from 1918 and 1918 or 19 onwards, a recession began, which reached its zenith in 1932. So, what are the characteristics of that recession? Drop in profits, first of all, and a drop in interest rates, secondly. Both of these kept having a downwards trend. When profits go down, when profitability goes down, it is obvious that there is no interest in investment. And indeed, there weren't any noteworthy investments during that period. Now, as regards drops in interest rates, this meant easy lending on one hand. There was laxity in terms of borrowings, and I'm always referring to the United States here. So it was quite easy. One could put 10% down and get a loan for 90% in order to buy a house in Florida, for example. Not to live there, not even as a holiday house, just to wait until the house price goes up and sell it on, and then make profit that way. This, in fact, continued to be the case, and in 1926, this broke out. What happened in 1926 was the burst of the real estate bubble, a precursor to another bubble that was still growing, and it had started growing much earlier. People at the time were in prospective fever. They were buying stocks all the time, hoping to profit off the shares and stocks. Those who managed to save themselves and sell off were very lucky. One of those was the father of JFK, who said he left the stock exchange because when he was dying, he was shining his shoes, and the shoe shine started talking to him about stocks and how to make money off that. And he said that was the telling point of that this is the point to get out of the stock market when even shoe shines have an opinion on the stocks. So the stock exchange collapsed in 1929, and the economy entered a great recession. And many support and contend, and it can be supported econometrically, that when profits and interest rates go down, those are the very components, or rather the fuel, which can lead to bubbles and potentially to the bursting of these bubbles in a painful way. So, what happened in Greece during that period? Greece need not have an economic crisis because it was already suffering a different crisis earlier on. And I'm talking about the crisis that it had accumulated a tremendous amount of debt. In 1932, it was almost 200%. So there's a stagnation. Anything that happens, it's certain that people are undergoing a recession. There's poverty, there's misery. 1.5 million people are refugees are settling in Greece, seeking a place to settle. And here I would like to say something that's very rarely said, but it's very interesting to note and to reflect on this fact. And it's this fact. In economic history, I cannot think of any other state which had so big a problem to solve. 1.5 million people, and which accounted for 25% of the entire population of the country. I don't think any other state has had to deal with such an example. And the Greek state mobilized itself, quite paradoxically, because we can accuse it of a lot of things, but at that stage, we have to say that it reacted very well. It communicated with the League of Nations. It found a response. And let me underline this fact, which is rarely said as well, but must be said. The League of Nations included an executive who was very able and exceptionally able. That's Henry Morgenthau. President Morgenthau, who was very able, very capable, of Jewish origin. He was a consul or ambassador, I cannot remember, of the United States to Istanbul. And during the persecution of the Armenians and the genocide, however you might call it, he had a tremendous contribution, a decisive contribution in rescuing as many Armenians as possible. So coming here, I think he showed strength of character. He was unimpeachable, despite the fact that he was of Jewish origin, and he didn't hide that fact. The Jewish population came contacted him, And let us please note that the Jewish population were a majority of the population of Thessaloniki at the time, or at the very least a high percentage of the population of the city. So they approached Morgenthau and said, instead of Sunday, maybe we could make Saturday a holiday. And Morgenthau said, absolutely not, because of Shabbat. He thought it was too disruptive. So the problems seem to be overcome. The economy and society in general seem to be stabilizing from 1926 onwards. But in 1928, Lefteris Venizelos became prime minister. He became very powerful. He was a very decisive figure. He had everything a statesman needs. In order to continue to receive loans from the League of Nations and to receive loans in general, we needed a central bank. This is not an issue of concern. Central banks at the time were not a common phenomenon. The United States had a central bank in just 1913. So if we had one in 1928, that's not such a shame. Everything I just said is the same for every country except England, which has a central bank since the 17th century. Now, the Bank of Greece, in order to become established, faced a number of problems. It was in a hostile environment, an inhospitable environment of commercial banks, with Ethniki Bank, the National Bank of Greece, being the top bank, which until then served in the duties of a central bank. It issued currency, it held the accounts of the state, of the government, and kept all the gold reserves of Greece. Venizelos asked, and for all of these, the national bank said, "Why? Why not? Why are you taking these things away from us? Haven't we not been doing a good job?" But Venizelos would not discuss the matter. He was just demanding them, and ultimately he took almost all the gold because the national bank was facing problems. And from 1928 onwards, it appears that the major issues had been resolved, and we would hope that things would go well. However, in 1929, the Great Recession broke out in New York. Venizelos said, "This is too far away; it won't affect us." He kept the stock exchange open. The stocks were going down, but Venizelos encouraged banks to continue buying bonds and shares, which is a well-known fact to us, to my generation, uh, uh, especially to my generation when there was a great effort to keep the index above 6,000, but this is ancient history now. But after that, the stock exchange was kept open for about 15 months. And then we reached the point in September 1931 when England decided that it cannot remain on the gold standard. It devalued the pound sterling by 30% approximately, and we had to see what would happen to Greece. What would have been correct until then, the drachma was a hard currency, or in other words, it followed the gold standard until that time. The currency we had to deal with was the sovereign, the pound sovereign, the British pound, and that was a fixed exchange rate for many years and would remain fixed. But since England devalued its own currency, Venizelos had to make a decision. And in this case, Venizelos said, "We're not distancing ourselves from the hard currency policy. Greece left the gold standard, but will soon return to it." I'm sorry, England left the gold standard, so Greece has to remain there as well. Because if we don't, they'll say we're unreliable. This this led to strife. Varvaresos, who was an executive of the Bank of Greece, insisted because he knew what was happening. He lived in England at the time. He knew precisely what was going on. He knew that England had left the golden standard and would not be returning anytime soon. Therefore, Greece should also leave the gold standard and devalue the drachma. However, Venizelos was hard-headed. He wanted a hard currency, a hard drachma, and instead of the pound sterling, he focused on the dollar to peg the Greek currency against. So 70 drachmas was equal to $1. Dollar can be exchanged for gold up to 1973. And then the US left the gold standard, could not bear it anymore. And we have to wonder, if the US cannot remain there, how could Greece? Obviously, it couldn't, which is why in April 1932, Greece became bankrupt. This led to a number of measures, protective measures. We wouldn't pay off our creditors. We have several coups in terms of politics, 2 by Plastiras, if I'm not mistaken. And then we had the dictatorship of Ioannis Metaxas. It was a tumultuous period until 1930, from 1936 onwards. Things were off the rails. I think the economic figures were a bit better. There was more state intervention, more extensive state intervention. And I think things were going well until that time. Because when the Italians invaded Greece during the Second World War, and we were truly prepared to face them, and this shows that we were economically robust at the time. We have to say that during Metaxas, I would like to add to what Mr. Tsulfidis is saying. During the Metaxas dictatorship, Great Britain, the British market, had accepted the fact of the debt settlement entered into by Ioannis Metaxas. Before that, while we had a parliamentary democracy, this was not the case. The settlement was debatable. But under Metaxas, the debts were settled after the bankruptcy, as Mr. Tsulfidis said, under much more beneficial terms for Greece, precisely because the British wanted Greece to absolutely remain on the side of the Allies, as was the case. I've ended what I had to say. Mr. Nautz, I'm sorry, the first speaker wants to add something. I didn't notice the time had passed because it was very interesting. Before going on to Mr. Nautz, who is of German origin, a professor, the narrative up to that point of Greece, of what we call interwar Greece, is that due to the very harsh terms of the Treaty of Versailles, this led to pressure on the German subconscious, which led to a change, a shift, an influx of people during the Weimar Republic era. I would like to ask if Mr. Nautz could, during his speech, explain, is this the key criterion, the key characteristic, or is it just the Volk as a German ideology? Today, by the way, Mr. Tsulfidis, is Marx's birthday. So what we call German ideology as it took shape, which is a historical fact, did this combination affect this change, this trend towards Hitler in the 1930s? Was it just the Weimar Republic measures? And also something about the state, because it was brought up. There was a state in 1922 in Greece. It may have lost the Asia Minor War, but just the fact that it waged a war, we can't even hold a single operation in Sudan today. If you compare the present-day state and the state in 1922, we had a state then, but not one now. because, as you said, that state was able to absorb 1.5 million refugees. And another thing for that comparison, for a few members of the audience, Ms. Bregianni did not say this. The National Bank of Greece did not want to assign its rights to issue currency to the Bank of Greece. Venizelos managed to take that money, take those rights, and give them to the Bank of Greece. Now the Prime Minister wants to transfer services from Athens to just the periphery of Athens, and he doesn't dare to do it. So we see a change. Mr. Nautz, you have the floor. Just to add to something, to continue what you were saying, it's important to say an international fora in 1922, or rather in 23 and 24, Greece, in its negotiations, made demands, negotiated. And we see this in the proceedings and the transcripts.
Όχι μόνο και τα δάνεια δεν ήταν ακριβώς και τα δάνεια.
And it was also the loans. And Greece negotiated having a weapon. We were ordered by the Allies to go to Asia Minor. Therefore, now you have to help us to absorb this huge refugee population. It's quite important. This is an achievement of the first Greek democracy of 1924 that we negotiated.
Okay, thank you very much. I take the last 5 minutes. It's a problem for a historian. Yeah. Okay. Because historians mostly need a lot of time for their presentations. Okay. In my chapter in this book, I provide an overview of the mostly literature in German language about inflation and deflation period in Germany. In addition, I've added economic data from the state level, from the local level, and from the company level. So you find a little bit more information and data than in the most publications, and I wrote a bit of my own. Well, this is mainly a story on austerity and deflationary policy, and of course a story of suffering, but it's not the story about Wolfgang Schäuble, I must say. So for Germany, we can say it has been repeatedly stated that the greatest concern of the population in terms of monetary policy is inflation. In the meantime, this is being questioned in research. I heard it 3 weeks ago on a conference in Leipzig. For Germany, the working hypothesis is put forward that the Bundesbank has published the inflation discourse in order to enforce and stabilize its autonomy it was striving for. Looking at the period between the two world wars, it was not the inflation that destabilized the political situation in Germany. This is not to say that high inflation rates are a welcome phenomenon. However, inflation has blurred the cost aspects of social reforms and of production costs in Germany. After the stabilization of the currency, the costs came to full effect. This affected society whose democratic liberal attitudes were anything but consolidated. But it took a bit more time than in Hungary or Italy escape from democratic order. It was 1933, by the way. So Germany's economic, political, social condition were already precarious when the country was hit by the Great Depression, what was discussed here on the podium. The glamour of the golden 20s may occasionally obscure this fact, like the Semmel question. Yeah? Semmler question. Yeah. After overcoming inflation, only a relative economic stabilization was achieved. The weakness of the Weimar Republic can be attributed to many factors, namely reparation obligations, occupation of industrialized areas, higher labor costs, increased social benefits, and an unstable social system. Moreover, so that's the main thesis of the literature. The Republic was embedded in troublesome foreign policy and an adverse global economic climate. Okay, we can say in the second half of the 1920s, we had some important developments with positive effects, especially the currency reform, the provisional settlement of the reparations issue under the Dawes Plan, for instance, or the supply of foreign capital. On the other hand, the economic constitution of the Republic was burdened by structural deficits. Industry had to contend with a lack of capital, overcapacities, and overall weak growth. And this protectionism, characteristic of the world economy in the interwar period, hindered a more positive development. Structural problems also affected the agricultural sector, which was in a permanent crisis, but agriculture has been exempt from restrictive economic or financial burdens, especially under Brüning. So this had a separate role. To this point, we could conclude the currency reform of 1924 created the basis for a stable currency, but the real economy could not be set to a sustainable and sufficient growth. Moreover, public finances could not be made resilient. This had led Knut Borchardt to speak of the crisis before the crisis. And this ambivalent assessment is also found among contemporary actors, such as one example, the Hessian Chambers of Industry and Commerce. The chambers welcomed currency reform and the Dawes Plan unanimously as a promising beginning of a new era. On the other hand, the chambers reported that the negative effects of the Reichsbank deflationary policy, the economy, so the analysis, suffered from a shortage of money and credit, as well as excessively high taxes and transportation costs. Together with stagnating Great Britain, Germany fell behind the growth rates of other industrialized countries. The peak of the economy was already over by the end of 1929 at least. The deteriorating figures for the domestic market indicate that the Weimar economy was already on its way to recession when it was hit by the collapse of the world economy in 1930. Not surprisingly, on this background, labor market was another serious problem for the Republic. After the end of the war, it stabilized only briefly. There was already a considerable base unemployment before 1929. Only for the years 27-28, the unemployment rate was under 10%. But by 1929 and 30, it again had climbed to about 14%. After that, world economic crisis hits the labor market with full force again. Researchers differ as to the causes of financial difficulties. Some share the contemporary assumption that excessive socio-political interventions by the state exacerbated the economic straits. Such measures affected the tax burden and the credit system, so the argument. Exceeding high wage levels were also held partly responsible by some other colleagues. During the Weimar Republic, these issues created conflicts which led to increasing confrontation between business associations and trade unions for this depression because of its high wage costs and expensive social policies.
The conclusion?
Yes, we can say that the deflationary policy, especially under Brüning, but started under the last Social Democratic chancellor, did not help mitigate the crisis. And this empowered the role of the parliament too. So we can say in 1930, 98 laws passed the parliament, and we have 5 emergency decrees without asking the parliament. The year later, 34 laws and 44 emergency decrees, and 1932, the year before Hitler, 5 laws and 60 emergency decrees. The analysis of the deflationary policy and the Great Depression in Germany. I need 2 minutes, then I'm finished. 2 minutes. There has been an intense there has been an intensive debate among economic historians since 2004 about the cause and effects relationship of the currency and banking crisis at the end of the Weimar Republic, with implications for the assessment of economic policy at that time. So, we have 2 positions. One is banking sector is the cause of the crisis. The other is international financial markets are the cause of the crisis, and we still have no solution, no common interpretation. Okay, sorry for reading, but it was in English, and I had to hurry up. And it's a book fair, and reading on a book fair is not so strange. Thank you very much.
Να κάνω ερωτήσεις για να καταναλώσουμε το χρόνο της ώρας και εδώ. Λοιπόν, ευχαριστούμε που ήσασταν μαζί μας. Λέω ότι ετοιμαζόμουν.
Thank you very much for being with us. I wanted to say that I wanted to ask questions to fill up time, but it seems that we took up all the time. You took up your attention. We were not fair to our German colleague, and I apologize, but I believe you got an idea of what the book is about, and it's worth looking into. Thank you very much.